Hi there.
Hey, good morning.
Good morning. How are you?
Good, good. My parents are in town from
Okay.
Hawaii, which is like good, but it also meant I had to get up at 6 a.m. And if anyone knows, I am not a morning person. And and then we have the coffee, and then I snooze for the half an hour before getting ready for the show.
Yeah.
But it's a busy spring, right? We're gonna be here. I got parents coming in. We got this Developer U program coming up next week, and then I'm off to Peru. So like we also
Yeah.
have the last like 3 weeks of training to climb the Inca Trail. So it's like an interesting time to be here in spring in Houston. So
Yeah. I mean,
yeah,
it's so funny. Like January was so nice. I was like, oh, this is exactly the kind of start of the year I want, slowing down. And then March just hit us
July.
like really crazy. And it goes really fast from March, April, May, June.
Yeah,
It's gonna be busy before it hopefully slows down again for the summer for some people. Mm.
yeah,
Yeah,
yeah.
no, so a lot of things happening. Last week, we did our founders and funders fusion, and we tried a new location this time. I wasn't there, Jason, but how did that go?
Yeah, it was part of the H Town Roundup. There's a lot of activity in the Green Street area. I think Christina and Morris over there have been working to build up this additional hub in downtown. Parking is good. The event space itself, I think, was funky for us doing it in a bar, and we learned some lessons there. But we had about a dozen folks come in, some new entrepreneurs, just good conversation. It's funny. I think people were surprised we covered their bar tab when we invite entrepreneurs in for the happy hour. We will cover the tab, especially for our members. And I think we'll also find a different venue next time. But it was a good learning experience. And importantly, I didn't have to schlep a bunch of beer around town while keeping it cold. So
Yeah,
operationally, it was good.
yeah,
But what's important is good conversation, good connection, and I think everyone got a chance to connect with Willie and kind of learn about how he can help and vice versa.
yeah. And just for those watching, what we're or listening, is what we're trying to do for these founders and funders fusion is do like a mini panel. We want to keep it informal, so as we're thinking about the location too, we want to keep it a happy hour type of format. um, and not make it too formal. And with the mini panel, it's going to include 2 to 3 investors that we bring in the community. They share their investment thesis, and we kind of pass the mic around for anyone who has any questions for them, and they kind of answer, and you get to know them. And I think that's we've done that in the past, and people really appreciated that informal interaction with investors to really understand how are they making their investment decisions, are they really deploying, and what they should be looking out for, and like those real tips from investors that are outside of like when you're formally trying to fundraise with them.
Yeah,
Okay.
and I think we put on hold kind of the office hours we did last year, and we're
Mhm.
going to try and bring them back again in the second half of next year of this
Yeah.
year.
Yeah.
But with the transition out of the Esperson, we're kind of regaining our footing on how we want to run some of these programs.
Yeah. And then, we've launched our investor program this year. So in May, for the first time, we're going to do a syndication meeting. And those are going to be for those who have signed up for our investor program. We bring in a few deals. Some of the other investors bring some deals. And we kind of just start doing some reps on like, okay, how do you evaluate these deals? How do we become better investors? And then eventually, if we do have a good deal, um, we try to see if we can come together and form an SPV and invest on it together.
Yeah.
So that's the overall goal. And if you want to find out more about the investor program, you can reach out to me, Jason or Juliana, and we'll be putting some more information on that on our website shortly as we're kind of revamping our entire website. Also, Jason, I was reading through our weekly newsletter, which always
Mhm.
has some great nuggets of information. And you had mentioned this GHP report that has recently come out, the 2025 Digital Tech Assessment. Um, do you want to share some of the key takeaways from that report?
Yeah, no, happy to. And I think this is something that
Mm,
Noah Fons had worked at over
mm,
there, and he gave us a preview of it. Um, I think was it maybe 2 weeks ago? I had gone to this happy hour they had put together. It was a panel, I should say, and some of it is focused on digital technology, and I think when we think about venture capital and the scalable business models, the reality is digital technology is just one of those very scalable venture investment models, and so there's a lot of interest in kind of expanding that within Houston. And I think one of the roles that's maybe not obvious is of the GHP is to kind of assess where the market is, understand kind of what the dynamics are in our ecosystem, and then just share that broadly. And part of that is sharing it to people outside of Houston so they know that Houston is an innovation ecosystem. And when you look at what this report details, it really shows how far the ecosystem has evolved just because of our audience and our focus on energy tech. I didn't necessarily spend a lot of time looking through all the like software specific aspects. There are aspects around AI and corporate innovation, but there is some good nuggets around energy tech, and climate. Um, and I think the important things that they were able to collect information on is just generally the stats on our energy ecosystem, the various corporate and CVC offices that are active here. It's very clear that there's an interest in SAF, carbon capture and storage, and just leveraging like the big chemical infrastructure we have in and around Houston, and continuing to leverage it. So there's some just interesting stats there, and it identifies who kind of those organizations that are more active. It's ironic. One of the things that came up at our Funders and Fusions happy hour was kind of Schlumberger's role in our ecosystem. And I'm seeing right here one of the top lines of the report. You know, Schlumberger has this thing called the Innovation Factory, that I'm not personally aware of, and so it pointed me to needing to kind of get plugged in with other parts of our corporate ecosystem that might be deploying innovation into our ecosystem. And I became aware of this because we had a couple of Schlumberger alums just show up at our last event, and they were telling me about it. I think the other things that are kind of key takeaways is there is increasing capital that's being deployed into our ecosystem. Climate tech and energy tech, of course, is relatively capital intensive when you talk about big projects. But the trend is upward, which is good. More capital being deployed. The data they did share showed data for venture deals, but only went through 2023. And I think anyone who's kind of in market knows that there's kind of a slowdown in both early stage capital deployed, and this year is just feeling very slow across like seed through Series A. But I think kind of the takeaways from the report is generally Houston is kind of tracking with national capital deployment, and we've been seeing a general increase in percent of capital within the U.S. like slowly tick upward. So there's a little bit of covariance, but generally as a city we're getting better in terms of participating in the national venture ecosystem.
Super interesting. Yeah, I'm like browsing through it as you were talking. There's a section on investors, and I was really curious to know like what kind of information they found out there. But um, it shows us that there are about 295 investors headquartered in the region.
Mm-hmm.
And if you include, family offices, government investors, and other groups who participate in VC deals, it goes up to 461.
Yeah.
And they've listed kind of the investor types, and like they've put angel as 161. And I wonder, and they probably have this, if I actually read this in the report, I might find out like how do they figure out how many number of angel investors we have.
Yeah, we can ask Noah, but I'm pretty sure what
Yeah.
they did is they looked at like the size of the Houston Angel Network, which
Mm,
is kind of a public group, and I think the reality of reports like this is they're kind of limited to public sources or easily accessible sources, and angel investors kind of self-identify, but I'm certain just within the oil industry in Houston alone, there are more than 160 angels. but they don't necessarily like wear it with a badge that they're investing. They tend to be kind of in these semi-private networks, where maybe they invest as a group or they invest alongside other folks from, say, Weatherford or Schlumberger that they knew. And so maybe they don't self-identify as angels, but they're clearly doing angel investing. And you just think about the raw size of Houston and what it takes to be a qualified an accredited investor, right? $5 million in assets, liquid assets. There are plenty of people who kind of fit that bucket, and maybe they just don't raise their hand and say, "Oh yeah, I identify personally in my life as an active investor," but they still make angel investments. And
Mm,
I think we've seen that with a couple of our seed rounds come together, where it's a lot of these check sizes anywhere from 20 to $200,000, where maybe that investor is doing one or two deals a year. They're not doing kind of a robust like seed fund,
mm,
but they're still kind of angels in that sense. So I think this is an undercount, but realistically, you don't have a better way to identify who's an angel investor unless they raise their hand, right?
yeah.
Um,
Hmm.
the other thing I'd say about this is generally, I think there was 156 venture capital firms in Houston. I think when we think about energy and energy tech, the number is a lot smaller. Like if we had non-CVC venture capital firms, I think the number is like 8.
Hmm.
So there are a lot more who are kind of in software and AI and SaaS kind of businesses who are explicit in that sense, and maybe some of them will look at energy, but I wouldn't say there are that many who are like as comfortable with the deep capex that a lot of energy tech requires.
Hmm. Yeah. And there's a really good figure on page 33 that
Hmm.
shows you a list of investors. I don't think this is an exhaustive list. It does say select Houston investors, but it's a good place to start, especially if you're in the early phase to see, okay, which one of these investor groups are investing in the early phase. You'll see most of the um, CVCs are not
Hmm.
investing in the very early stage, but a good place to start.
Yeah,
Hmm.
good.
Yeah. Awesome. Yeah. So that the report you can find on the GHP website and read in detail, and it'll give you a good overview of what's happening.
Yeah, and it's called the GHP Digital Tech Assessment Report.
Hmm. Yeah.
Yeah, it's a little buried on the website. You have to go like into the document cluster, and it's not featured on the top. So, but it's pretty decent.
Hmm. And last week was also the NREL conference. So
Hmm.
we saw a lot of activity on LinkedIn. A lot of our members were there. Juliana was there from Energy Tech Nexus. So we have to catch up with her later today and figure out, I don't know if you've heard anything from the members other than what you've seen on LinkedIn.
No, I think I saw Emily was up there, Resilient, and she tagged us on a few things, and I know Sujatha was there,
Moji was
Clement,
there. Yeah.
Moji was there, so it was good. I mean,
Yeah.
you can raise capital at NREL. It's a good one, and slightly different group than all the folks on the East Coast, because of its location. It tends to pull people from Seattle and California as well. Just being
Hmm.
both more in the middle of the country, but also a nice established, renewable energy lab.
Hmm.
Um, and I'm glad they're still pushing it.
Yeah,
So
it's like
it's a good
March
program.
is the time for like all these conferences. We had
Well,
CERAWeek, NREL, RPE. Yeah.
yeah, you think about the timing, right? Like you've got
Yeah.
to get your term sheet together by like mid-April, and then if you got
Mm,
60 days to close, that puts you at June 15th to kind of get a deal together, and then everyone goes on summer break. So, like for people who are kind of doing a roadshow and need to raise like a $3 to $5 million round, I mean, this is it. You got to do it now.
mm,
You got to get the term sheet, or your lead really circled in the next 15 days. And the clock's ticking. And if you just start to get too late, like as soon as July 4th hits, man, everyone's going on vacation. It's hard to collect signature pages or get the investment committee together. So it's really a ticking clock. And then, that kind of cycle spins up again after August 20th. So you're kind of SOL for 4 or 5 months if you're trying to put together an institutional round,
mm,
especially here in Houston. And then and then once you hit September, then you got to get everything done before Thanksgiving. So
Mm,
I think that's sort of, I don't want to say it drives the calendar, but
mm,
in terms of these conferences where you raise capital, like the it's as much driven by the clock is ticking than anything else.
mm. Awesome. Do you want to talk about what's coming up next, or do you have anything else?
Yeah, let's see. What do we got this week? I think we have a Work Wednesday lunch this week, which is going to be another chill one. And then we're also running or supporting, I should say, Developer U next week, which will also be out at our Gessner location. I think they got a happy hour going on Monday at a bar nearby, which should also be good. But for me and myself, we're kind of in kind of quarterly planning for the team, and then I'm off to Peru after that,
Hmm.
as I've said a couple of times. But importantly, I think coming up that in 2 weeks, we also want to invite everyone out to come visit with Earth and Metals. We do have to get kind of people registered ahead of time. We're organizing a carpool, and they've asked just because of their IP and wanting to keep a sense of who's coming in. They want to review everyone who's registered and clear them for basically participation. But we're going to get kind of a rare chance to see, a steel development mill in action.
Mm,
And so I'm really excited for it. I personally like seeing factories. And it'll be a good opportunity to see, one of our companies in action, and then also connect with fellow innovators. So I'm really
yeah.
looking forward to that. And that's going to be Wednesday, the 16th.
Yeah,
Yeah,
April
Wednesday the 16th.
16th, Hertha Metals. This is exclusively for our members, but if you're a non-member, want to become a member, this is your opportunity. We'll be organizing carpooling from our location at 820 Gassner, and we'll drive up there together, and there'll be an interesting program. We'll have a tour of the facility, but also the opportunity to kind of network and get to know some of the other Energy Tech Nexus members, and some of our investors too will also come along.
Yeah.
Um, and the Developer U conference is a 2-day conference. I think we're doing this for the first time here in Houston. And it's organized by Spring Lane Capital,
Uh, Wilson Sonsini.
Wilson Sonsini,
and
um,
and the Creo Syndicate. I think the Creo
the
Syndicate
Creo
is
Syndicate. Yeah.
pulling most of the funds
Okay.
and programs together,
Okay.
and it's really based on some work Spring Lane Capital did, um, over the last 10, 20 years,
Mm,
in terms of helping get companies to a deployment phase with their technology. So as much as we're all excited talking about first of a kind and folk, I think Rob and Nikhil over there have been talking about that for like twice as long,
mm,
and really thinking about like the funding mechanisms needed once capital is, or once that first of a kind is kind of in place. Like how do you fund the second of a kind, third of a kind, and onward? Because that's where the value unlock is for
mm.
a lot of these hard tech companies.
Yeah. Um, and I think they're already full in registration for this time around. But if it's successful, they'll come back and do this again in Houston. I'll be attending, so I'm really excited to be there and see, what the curriculum is, and how, and hopefully some of our members have also signed up. So in about 2 weeks tell you how it went, and how valuable it is, for anyone wanting to learn more about project finance, development strategies, building hard tech infrastructure. I think it'll be very useful.
Yeah, I had someone reach out from California say they were coming in, so it's also pulling people from out of state, which is
Nice.
interesting to me.
Yeah.
Yeah.
Good. And then we're holding a DTL. This time we're not doing a lunch, determined to lead lunch, because we're collaborating with Rice University and their undergraduate venture team. And so we're hosting a women in VC panel. We'll be bringing 2 or 3 women, who are kind of prominent fund managers here in Houston, have been investing for a few decades, and yeah, open to all women. Hopefully, it will attract a few of the students at Rice. And sorry, not only just women, open to everybody. But the whole goal of Determined to Lead is to really feature female speakers. But everyone's welcome to join.
Good.
Hmm. Good.
Yeah. Do you want to talk about current events a little bit?
Yeah. Let's talk about
Yeah. So
humans.
one of the things that kind of crossed my inbox was kind of this speech that came out of Canada about kind of disconnecting ties with the U.S. And I didn't know how much to read into it. I don't know how much of it is in policy, just because I'm not as aware. But I know we have our cohort of we got like a dozen companies that are based out of Canada between Atlantic Canada and then of course Calgary. Calgary is kind of a sister city, of course, to Houston on the energy side of things. And I haven't had enough chance to kind of sit back and say, okay, what does this actually mean for innovation and technology companies coming here? Um, it seems like it was big news, but I don't know how big news looks on Reddit sometimes. So I don't know if you
You
got a
read it on
sense of
Reddit,
like,
yeah. Yeah,
yeah.
I know. I saw like their new prime minister, made some pretty tough words about like, the era of like the US and Canadian like strong partnership is over basically.
Mm,
Was something along those lines is what he said, which was, maybe it's true, but we don't know how long this new era is going to last.
mm,
It's really hard to say, but I think overall what people are saying is it just adds a lot of uncertainty, and uncertainty is not good for any long-term planning,
mm,
long-term project building. So when we're talking about energy tech, that impacts companies in the US and especially companies in Canada. For many of them, Houston and the US is a big market to enter after they've kind of proved the concept in Canada. So I think there's definitely some nervousness around what all of this is going to mean. But I think only time will tell
mhm,
in reality how much it's going to impact. The relationships we have with Atlantic Canada.
mm.
We do a project with them where we help about 9 of their companies come and expand to Houston. We want to continue doing that work, but it only depends on if that funding is going to be available in the years to come.
Yeah. No, there's a part of me that wonders if some people won't take the risk to enter the U.S. market,
Mm.
and I'm sure it will. And the reality is, in a place like Houston, there's not as much homegrown technology as I think we would like to see, just because of the maturity of the market. And it's unfortunate if we don't have access to a lot of that talented innovation that comes from elsewhere. And there's a part of me that's wondering, how do we keep that pathway open? Because the reality is, to solve kind of the energy trilemma, you do need new technology, be it better AI systems or better widgets or better processes for engaging stakeholders. And even if you have a tariff or a tax on the service, just having no access is its own kind of challenge. And some of the most interesting technology companies we've seen have come, here in Houston even have come out of Canadian roots. So it would be unfortunate if that's like a resource we're closing ourselves off to. But I'm not sure if there's anything we could even do here to kind of reduce the friction, unfortunately.
Um, yeah. No, exactly. I think a lot of it, it's just speculation at this point, but um, we we do hope that we can continue that partnership. Like people have said, like the Canadian US border can be so porous for some industries.
Mm,
Um, yeah. And it's a question mark on how that's going to go going forward. I mean, from the companies that I've been talking to, they haven't expressed an hesitation to come here or to build their offices here. I think they still plan on doing that. Um, because in some way, like people, say Canada needs the US more than the US needs Canada. Like Canadian companies really need access to the US market. And some people are thinking everyone's kind of evaluating their strategy, but their strategy is that let's go at least go down there and see what's going on
mm,
instead of shutting off just because of the rhetoric and what's
Mm.
being said politically. Obviously, it's going to impact the policies, and that's going to impact people on the ground. That's going to impact businesses. Um, but I don't know. There's a part of me that's still optimistic that it's not going
Mm.
to be as bad as it sounds. But I don't know if I'm just being naive. Hmm.
Maybe hopefully we're all we can maintain our naivete. So
Yeah, because
um,
what else are you gonna do, right? Like, you gotta be in the, more in the problem-solving mindset, like, "Okay, what
mm,
can we this is the situation right now, like, how do we still move towards our goals and what we're trying to do?" Mm.
yeah. In other news, I was looking at some of the financings from last week. Interesting to me, Mercury Bank raised a $300 million Series C, which sometimes I'm just amazed. Like, this is a bank that's kind of next generation finance for startups. They have really good startup programs in terms of opening your first bank account with them and doing digital processing. Um, and sometimes I'm just surprised that these are actually small companies. I think Sequoia just led their last round. It was a $3.2 billion valuation. So I think it means two things. One, there's a part of me that says, do I want to lock up my money with a company that might go out of business if they're not successful? So that one, that was kind of news to me that they're kind of venture backed. But two, it also just means that there's still healthy growth in kind of serving the financial aspects of the U.S. market and specifically its startups. So I just thought that was interesting, and they're continuing to grow. So I think anyways, it's a good thing. I also saw that out of Massachusetts, there was a company called Via that got funded. They got a Series B. It was a $28 million round. This one was run by Bosch Ventures. If I remember, Bosch Ventures does only a few deals a year, but they're doing a blockchain for energy, and they're leveraging on top, I think, an AI system to help people make better use of their data. So interesting that that's still a relevant topic today. People are still deploying capital. Series B tells you it's a little more mature. I think the round was marked as early stage venture on Crunchbase, but I think that's just because it's a Series B. But there is some maturity in that space if corporate venture capital is coming in and taking a lead position. And I'm glad to see kind of the blockchain that was a lot of hype 2 or 3 years ago is starting to get into the market. Um, Speaking of iron manufacturing, since we're going to go visit Hertha, I saw there's a company called Gravity High that was funded out of, gosh, of all places, Marseille, France, which, like, sign me up. I would love to live out there. But they're a hydrogen reduction technology. What do they say? It's an iron manufacturing firm that reduces kind of the carbon footprint of iron using a hydrogen reduction technology. For those of you guys who maybe aren't as tight on it, steel making, iron manufacturing is considered one of the hard to decarbonize sectors, just because, like, you intrinsically need carbon and a lot of energy to make your steel. And I'll bring back an anecdote on that after we get to the end of the show if we still got more time. What else did I see? I think I saw a company got funded out of Dallas recently. I'm trying to remember which one that was. But that was also an energy company. Let me see if I can pull up that record here while we're talking.
Hmm.
Oh no, that was an enterprise security company. Never mind, pass. Not that interesting.
Hmm.
And then another Canadian company I saw get funded was I think I've seen them for a while now, Summit Nanotech, and they're a lithium extraction company. And I think we've seen a couple of lithium companies raise some capital over the first quarter, and so there's that continuing trend of investing in lithium supply chain. I heard over the weekend, if lithium demand continues to grow, all the lithium sources that we know of, we have 100 years of lithium supply left, which is both a lot of time, plenty of time to figure things out, but also surprisingly not a lot of time when you think about the long arc of human history. So we will need new technology and access to this stuff
Yeah.
um, over the next few decades. So
Yeah.
those are just some interesting
Hmm.
financings to note.
Hmm. Sounds Yeah. So there are still some financing going around.
Yeah.
There's
None
money
in
here.
Houston. Yeah, it's
Yeah,
all in these other places,
I
so
know, I
we need
know.
to do more here. But
Yeah,
hopefully that means companies that will be obviously opening up
yeah,
Houston operations, selling into the energy industry.
yeah,
I even saw there was another geothermal company, XGS, that's out of the valley,
yeah,
that also raised some financing. So
yeah,
they raised $13 million, it looks like.
yeah.
So,
Yeah, and I just saw there's like I was just looking at energy capital like HTX, and there's uh, com- uh, a Colorado-based company called SMT Energy. Have you heard of them?
hmm.
They've raised
No,
135 million in funding for a 160 megawatt battery energy storage facility here in Houston.
nice, nice.
So that's a lot of money, but I think that's something that's, people are talking a lot about how battery storage and solar and wind are really helping our grid system here in Houston right now. And if it's often not talked about is how much progress Texas has made in the past decade when it comes to adding renewable to its grid.
Yeah, for better or worse, the open market here means people can experiment, and it's relatively straightforward to get a permit and sell power. And the razor's edge of a competitive market means the projects that are fundable won or are deploying, and I think that's why we're seeing the battery plus storage take off. Is it's that combination of what's more profitable than natural gas or coal. Like, it works here, and we have the ability to kind of lead the way just by like virtue of the market dynamics. Love it or hate it, the money talks. So
Yeah, no, exactly. It's really good to see. Even though I
yeah,
think people are a bit scared about some of the new policies that are coming in Texas that might jeopardize some of these projects, so or at least development of new projects. But it'll be interesting to see.
yeah. Well, the reality is, like, solar
Mhm.
plus battery is the cheapest. Like, I think we can go off and, yes, it's going to take 3 years to get a natural gas gen set online, but like you can get a solar and battery system commissioned in 6 months. So there's like a time value of money thing going on there. Um, but as the costs continue to decline on solar and the costs continue to decline on batteries, it's unclear you're going to get cheaper from fossil fuel systems. Like, even if the price of gas, well, it's unlikely the price of gas is going to hit like the 50 cents per MCF we've seen in the past, because we're exporting it, right? It's going to export terminals, and so you're looking at $2 to $4+ of export, where that demand is going elsewhere. Maybe as those systems come online, I don't see the price dropping, right, unless production really goes up. And the reason we had such cheap gas before was because we were oversupplying it in the Permian Basin, and that drilling is slowed down because they figure out how to modulate, how much we need to produce. So it's unclear to me that like low cost natural gas systems would kind of make that comeback if they're just like fundamentally constrained by cost of gas. The turbine systems themselves are limited in supply because GE only makes so many of them, um, and you can get the solar systems up and running pretty quick. So it's hard to fight forces of nature when those market forces kind of do what they do, right? So,
Yeah. What else
well,
do we?
I listened
Yeah.
to an interesting podcast over the weekend, which
Yeah.
as some of you guys know, I like high production radio. I listened to this thing called Radio Lab, which I realize I've been listening to for like 20 years now. And the name of the episode was called like the Malthusian Swerve, and it was the premise of it was around like how much resources are actually on the earth if we consume monotonically, and kind of the history of things. Like, the U.S. grows at like 3.5% a year. Like, the world economy just tends to grow between 3 and 4% of GDP, and if you use that as just like a proxy for consumption, it you kind of look at this and say, okay, well, what is it? It's the extraction of resources, right? It's the growth of things, right? The consumption of wheat increases 3 to 4% a year. The consumption of iron grows at 3 to 4% a year. Like, it's like you can kind of roughly track the growth of consumption with GDP, because that's the value that's coming out. And so they go through this kind of interesting history of like why we have various resources. Like, when steel production started to pick up, In Europe, they started cutting down all the trees, which is why there's like no old growth forests in the UK and in Italy. And inevitably, what happened was there was like an, a limited supply of trees to feed like the industrial revolution and the steel mills and the coming in steam systems. And there was like literally a resource cliff that everyone was looking at going, snap, like if we don't solve this, we're going to run out of forests and then society is going to fall apart. And inevitably, what happened was like we discovered fossil fuels, which is kind of the irony of this. And the geologists figured out how you can look at the geology, and look at the rock, and you can find coal seams. And so that's when we hit like the stride of the industrial revolution, is because we could extract coal out of the ground and we can continue to make stuff. And we're seeing now 200, gosh, 300 years later, we've kind of extracted most of the easy to get coal. We're starting to extract a lot of the easy to get oil. And then the question is, okay, we're facing this cliff of peak oil. What is the next thing? What is the next energy resource? And and I think in Houston we talk a lot about how the energy transition is always happening, and it's literally like the story of the industrial revolution and how we're always transitioning energy resources, and everyone kind of sees a limit on things, and we find something new. And it was just an interesting perspective on the transition. Was totally not coming at it from a climate angle, but it's just like a historical review of kind of how you have to look at constrained resource extraction. So very interesting, good storytelling. Would highly recommend it. It's called Radiolab. But they threw out some interesting stats. 100 years of lithium available left. The prediction for peak for total oil available is about 2050, which is why it's very important we do an energy transition before 2050, independent of like CO2 abatement. Like if you just run out of physical shale to extract, even if you extracted 100% of the energy in shale, and you continue that kind of growth of consumption, it's unclear we have proven reserves that would kind of support that demand over time. Um, and I think one of the other things that was in there is like the amount of copper, if we don't recycle, is like less than 30 years of copper, right? And so you think about
Wow.
like all these things when we talk about critical
Mm,
resources. Copper goes into your motors, your EVs, they go into your
mm,
generators. So A, recycling super important, but B, there will be new technology that takes its place. It's just a matter of finding it, and that's why we continually have to bring in new technology, because we're also like faced with resource constraint. And the beauty of kind of our capitalist market system is like when you find a new technology and it works and it creates value, you will make money at it because everything else becomes resource constrained. So
yeah.
it was very interesting. Would highly recommend.
Yeah. I feel like there's been so much talk of abundance lately, that I think it's important to talk about like how there are resources that are limited. And that's where like circular economy and us thinking about recycling like copper, lithium,
Hmm.
and also, I mean, fossil fuel. Yes, we have a lot right now. It might seem like it a decent price, but like let's be responsible with how we use it, just because
Yeah,
it's not going to last forever. And it comes down to like thinking more long term about energy resilience. Um, and as a country too, thinking about energy independence, like let's think more long term. Just because we have this energy available at a cheap price doesn't mean that we need to kind of consume it now.
yeah,
How do we build more efficient systems? And that's why you need the innovation that's happening in energy transition, in decarbonization, because a lot of the decarbonization work that's actually done is actually efficiency.
yeah.
Mm.
And and I think if you guys remember, like I went to this Karuna mine in Sweden, um, and it's like the same story there. I think they started mine. It's like it's a iron seam that literally just goes straight down, and they started by digging it off the top of the mountain, and it's one of those things where they started drilling or digging it in the 1900s, and here I'll throw up this picture. This is from Wikipedia. So they started mining it way at the top, and you can kind of see like each step gets progressively larger in terms of how deep they're drilling or mining this thing. And there's this like very real challenge where they're like over a kilometer, 1.5 kilometers deep now, and when you get too deep, like, you actually get into the Earth's core, or close enough to the underground where it gets too hot for the mining equipment and electronics to work. So, like, they just don't even know if they have the technology to do it. But you can see, like, not a lot of consumption, and then the consumption just kinda grows exponentially. And I think that's the kind of the challenge people think about. It's exponential growth. It's that compound interest kind of effect that really, drives the increase in demand, because we just like stuff. Like, steel and iron is just super valuable. And even if we have a lot of reserves in the US, for example, if you think about it, even if it's twice as much as we think, because the consumption is always increasing, like, twice as much, reserves doesn't mean twice as much time, right?
Yeah.
It's a log effect.
Mm. Mm.
And it just depends on what your growth rate is that
Mm.
really affects that demand. And unfortunately, a low price environment means what? More demand. So it's not necessarily the best. It's a hard balance. Do you extract the
Yeah.
value now, or do you hold it for
Mm.
later, right?
Hmm. Yeah. Um, yeah, no, absolutely. I think it's definitely a thinking that we should adapt more broadly
Mhm.
in the
Good.
ecosystem. Yeah, awesome. Um, no, I'm excited about the next couple of weeks. We also have the Rice Business Plan competition coming up here in Houston, which is one of the biggest. What does he call it, Brad
Uh,
Burke?
the richest is it the richest, business plan competition in the US? That might be
Yeah,
correct.
the richest college student business plan competition in the world.
Yeah.
Yeah, and it's always a lot of fun. Some of us will be there as judges and just listening to these pitches. Next Thursday, Friday, and Saturday, I think is the last day where you hear the final pitches. So yeah, so we'll be sharing with you how that goes, and who are the finalists of those pitch competitions.
Good. You gotta tell us who the winner for energy is.
Hmm.
So,
Hmm.
there you go.
Yeah, awesome. Good. Well,
Alright.
this was good. Thank you for listening. For all those who joined us, please, drop your questions if you listen to this later on, and we will see you next week.
Alright. Catch you later.
Okay.
Bye.
Bye.